When it comes to insurance, particularly health insurance, it can be viewed as an unnecessary evil. However, when it comes to homeowners insurance, well, that's what we're going to be talking about in this episode. Thank you for tuning in to the Greatest Asset Community podcast. And we're going to be talking about insurance. Insurance is one of those things that I have personally seen be the difference maker in someone being able to qualify for a home and not qualify for a home. And that's because insurance directly impacts what you're actually approved for, which is a monthly mortgage payment. And so how much you pay for insurance, shopping around for insurance, all of these things can be the difference maker in whether or not you qualify for that home. So we're going to dig into some of the details about what you need to know when it comes to insurance, selecting the right insurance, what you're going to pay for insurance, and how you can make sure that you're getting set up the right way. Now, I will say this off the jump. I am not an insurance provider. I am not an insurance salesperson. I am a mortgage loan officer. So I'm specifically going to be speaking about insurance from the vantage point of how I work with insurance with clients who are looking to purchase a home. Just want to put that out there from the jump. You really need to go talk to a insurance specialist who is going to be someone who can actually give you a quote for insurance. I can't quote you for insurance, but I can tell you about insurance and the impact that it's going to have on your mortgage payment and how it's going to have on your financing overall, as well as your ability to be able to get pre-approved and finally approved for that home loan. So jumping on into it, insurance is one of the four pillars, we'll say, that forms your mortgage payment. There's principal, the loan, the amount that you're actually borrowing in money. There's the interest rate that you're paying. There is insurance, and insurance can be broken into two types of insurance. You got homeowners insurance, but you also have mortgage insurance, but we'll just say insurance and lump that all together. And then there's taxes. Now, if you have a homeowners association fee, we do factor that into your monthly mortgage payment, but you actually will pay that outside of your mortgage payment. However, principal, the amount you pay, the amount you're borrowing for the mortgage, interest rate, insurance, and taxes. Insurance is one of those things that can be the difference maker. So let's say, for example, if you were to find a home, or your mortgage loan officer says that you qualify for a $300,000 home, and you go and find a $300,000 home, but that home that you find has a tax rate that is higher than what your mortgage loan officer was originally planning on your tax rate being when they pre-approved you. That's something that could end up causing you to not qualify for that home. So one of the things that can push you back into that range where you can qualify to purchase that $300,000 home with the high taxes is if you're able to find an insurance quote that is lower than what the loan officer originally was planning on being. So again, it's like you've got different levels here. You've got a lever for your loan amount that you're actually borrowing, a lever for your interest rate, a level for your insurance, and a level for your taxes. And these levers that you have are all having your monthly mortgage payment go up and down. And so some of these levers you have more control over than others. For example, you cannot control your taxes. The taxes are what the taxes are. In some instances, you can't control, well, the other three you kind of have a little bit more control over. But if you want a $300,000 home and you put 3.5% down, that's $10,500. That means that you're going to be borrowing $289,500. And so that is the loan amount. You can't control that if you're going to purchase a $300,000 home under an FHA loan. Your interest rate, you may be able to control or you may not be able to control depending upon the loan program that you get, how much interest rates are at any particular time. Having a hard time talking today for some reason, but in any case, your insurance, this is something that you can control though. You can control your insurance. You can control how much you're going to be paying for insurance. And that's what I really want to get into is how you control how much you pay for insurance. So there are a few factors that are going to go into your insurance. A lot of insurance companies are going to do a soft credit pull on your credit report to determine what your credit score is. That plays a factor into how much you pay for insurance. It goes into a lot of stuff with home buying, and I've said it a lot throughout. If you follow this channel for any length of time, work on your credit, pay all of your bills on time, keep your credit card balances low. I keep hammering that over and over and over and over again in every single video, and all of these different things that I push out is keep your credit card balance is low, pay all of your bills on time, work on your credit, work on getting those collections off of your credit, those charge-offs off of your credit. I've got a link that I put in the description, which is going to give you access to a program that I created to teach you about credit so that you can learn all about credit, learn how to repair your credit, learn how to build strong credit, how to maintain strong credit, how to leverage credit to your advantage when it comes to purchasing a home so that you can save thousands and tens of thousands of dollars in just a short time frame, a matter of just a couple years, or maybe even just 1 year even. Hundreds of dollars a month on your monthly mortgage payment that you can save literally because you're making great decisions with your credit. Well, this is one of those things where if you tap into your insurance and you do this thing right, you can actually get a better and a lower quote. So one of those things, having great credit can play a factor in you having a lower insurance premium. That's the amount that you actually have to pay every month for your insurance. That's the premium. Now, another thing that's going to affect your monthly payment is your deductible. Your deductible is what you have to pay before insurance will kick in. So let's say, for example, that you have something that happens with your home and you want to file an insurance claim. If you have a $2,000 deductible, that means that you're going to have to pay $2,000 before insurance comes in and covers the remainder of whatever insurance is responsible for. If your deductible is $5,000, you have to pay the first $5,000 before insurance will come in and cover the remainder of whatever insurance is responsible for. Now, that affects your mortgage payment because, as you can imagine, most repairs are going to fall under a certain threshold. And so you might have some of your major repairs that are going to be, maybe $10,000. You get a roof that gets damaged. Your HVAC system gets damaged. Those things might cost you in excess of $10,000, but most of your repairs are going to fall under a certain threshold. And so if you've got a deductible that is high enough, that means that you're going to be covering most of the repairs that fall under that threshold, or all of the repairs that fall under that threshold, because if you've got a $5,000 deductible and something breaks that's going to cost $5,000 or less, essentially, then you're going to be paying for that. Insurance is not going to have to kick in to try and cover these expenses, or these repairs rather. But as a reward for that, or as I guess you could say something that the insurance company gives you for covering all of those things and not having to rely on insurance to cover it, you get a lower premium, meaning your monthly insurance payments are lower. So if you want to decrease that insurance payment, then you can simply have a higher deductible, and the higher your deductible, the lower those insurance payments are going to be. So that's one thing. Now, you don't want to make that insurance payment, you don't want to make that deductible too high, because you do want to make sure that it's something that you're actually able to cover. Because if you've got a $5,000 deductible, but you don't have $5,000 and something happens where your roof gets damaged or something major happens and you need to file an insurance claim, insurance is not going to kick in until you've paid the first $5,000 if you have a $5,000 deductible. So you want to make sure that whatever you set your deductible at, it's an amount that you can reach so that you can pay that and insurance can kick in and cover the rest of it. So the deductible is another thing. So we've talked about two there. You've got your interest rate, and that's going to, have a determination on how much your premiums would be for that insurance. But then you've got your deductible, and how much you set your deductible at is going to also have an effect on how much you're going to be paying in monthly premiums. Because like I said, the higher your deductible, that means the more things that you're going to be covering that insurance doesn't have to cover. So they give you a little bit of break on the premium when you have a higher deductible. And even when insurance does kick in, let's say that you've got a $5,000 deductible, and insurance does kick in and they have to cover anything above $5,000, and you have a repair that's $7,000 or $10,000. Well, now you've got insurance that's not having to pay as much as what they would have had to pay if you only had a $2,000 deductible. So they're able to save a few thousand there. So again, that deductible, something that can definitely help lower that payment and possibly be the difference maker in you being able to get approved. Now, you want to make sure you have the accurate coverage, and that's going to move us into the third thing that I'm going to talk about, which is the coverage that you get for your home. So there's certain coverage that the mortgage lender is going to require you to have. One of them is They're going to require that you have coverage for the home to be rebuilt if it's completely destroyed. Your home is the collateral for the loan that the lender is giving you. And so the lender wants to know if this home gets completely destroyed in a fire or whatever, that you've got insurance to cover this home getting rebuilt. And that way the lender has something that's going to be backing the money that you owe them. So that's one thing. But outside of that, there's a lot of different variables in terms of what you want your insurance policy to cover. Maybe there are certain systems in the house, some certain major systems, some systems that might not be as major that you might want covered or you might not want covered. Having those things added to the policy or having them removed from the policy, those can be difference makers. Maybe it's some things with bodily injury that happens within the home that you want covered under your insurance. Those are some things that can raise your insurance premiums, but depending upon what you have in there, maybe it lowers your insurance premiums. So you want to also look at the things that you have in there, and you want to make sure that your insurance policy is geared more towards you, more towards what you need in a home. So again, I'm not going to tell you what you need to have in an insurance policy. Have that conversation with an insurance provider, but also take a look at what it is that you need personally, that in order to make sure that you're properly covered. So there's a lot of information out there. I don't want to be your source on insurance, but I do want to let you know how it can affect you when it comes to your monthly payment. And those are 3 areas in which insurance can be a difference maker. And again, a lot of mortgage loan officers look toward insurance, homeowners insurance, particularly with what is it that we can do to possibly get you to qualify. If you're this close from qualifying, maybe, they need to find an extra $20, an extra $50 somewhere. A lot of times insurance is that first place that they go to look. And they say, hey, are we able to get this policy down a little bit? Are we able to get this premium down a little bit so that we can get this person qualified? So that's one of those places where, a lot of loan officers look. And the 3 things that can affect how much you're paying in that homeowner's insurance. Again, we mentioned your credit, making sure that you work on your credit, that you have great credit. 2, your deductible, how much you're going to be covering in the event you need to file an insurance claim before insurance kicks in. So the higher your deductible, the lower your premiums. The lower your deductible, the higher your monthly premiums for insurance. And then thirdly, what you actually are having covered in that policy, how much stuff is going to be covered, what's the extent of everything that's going to be covered. That's going to also affect how much you're going to be paying every month in insurance payments. So keep that in mind. Insurance can be a game changer for you. That's what I have for you. Thank you for taking the time to tune in. As always, tune in on Tuesdays for home finance hacks. These past 2 Tuesdays have been amazing. And if you missed them, go back and watch the replays. Go to the playlist, go to Home Finance Hacks, and you'll see the replays there as they get posted. Make sure you go and watch the replays if you miss Home Finance Hacks, because there's some really, really great information that's getting put out there. And I don't want you to miss it, because it could potentially be a key or a nugget that I'm giving you in Home Finance Hacks that's going to make the difference between you renting right now and you becoming a homeowner later this year or next year. So make sure you go tune in, get that information. Till next time, take care, be blessed, and we'll see you in the next episode.